From AAAFx, this is Christopher Lewis taking a look at the upcoming week of March 4th. First thing I'll do is take a look at the calendar and take a look at the potential market moving events. The first event is on Monday. It is the Swiss Consumer Price Index, and while this will probably have somewhat limited effect on the markets in general, we are seeing the Swiss franc taking on the chin a bit against other currencies, and that's because a lot of traders believe that the Swiss National Bank will be one of the first major national banks or central banks to cut rates. So while this is probably not a major market moving event for global markets, it certainly could have a major influence on the CHF pairs. So pay close attention to that. So after that, it's pretty quiet. We do have a speech by Ureta, the BOJ. A lot of people are watching the BOJ right now because there are concerns that perhaps they may tighten monetary policy into positive realm at this point. But really, the interest rate differential between the yen and everything else is wide enough to drive a truck through still. So I think it's probably something that could cause some volatility. I don't know that it changes the longer term trend in a lot of those currency pairs. We do at 3 p.m. GMT get the ISM Services PMI number coming out of the United States, expected to be just shy of 53. Interesting, it is a decline from the previous month, although we'll get the revision, so we'll have to wait and see how that plays out. But this gives us a heads up as to potential inflationary pressures in the United States, which of course has been the main question for a lot of markets. So Wednesday, very interesting session because we have GDP coming out of Oz. The Australians, of course, will be closely monitored because they are the gateway to Asia. This obviously should have an influence on the ASX 200 as well as the Aussie dollar. Later in the day, we get a slew of announcements coming out of North America. As a matter of fact, Wednesday, it's primarily about North America, with the ADP Nonfarm Employment Change numbers coming out of the United States. Now, those of you outside of the U.S. may not be aware of ADP, but I believe it's automatic data processing. It's a corporation that if you have a company and you want to farm out your payroll to a third party, they're one of the biggest ones. So they released this announcement, this estimation of what's going on with employment in America. So it doesn't have a lot of like seasonality and adjustments and estimations and things like that the official numbers have. It's literally just the amount of jobs that go up or down in the U.S. economy, and as far as they process. So it's actual hard data. That being said, it is often a directionality type of number. Is it higher? Is it lower than expected? What does that mean for the jobs number coming out of the Bureau of Labor Statistics? So that generally, if it falls in line, it doesn't have any effect. But if it misses completely in one direction or the other, then you could see the stock markets in the United States react pretty aggressively. So shortly after that, we have the Bank of Canada with its rate statement and its overnight rate decision. It'll be interesting to see how that plays out because the BOC has been all over the place as far as inflation. So it could be noisy. They, of course, have a press conference a little later. I think that's probably the real important part of that. We do get Jerome Powell speaking in front of Congress. It's his semi-annual testify in front of Congress kind of meeting. It's a 2-day deal. Generally, most of the reaction happens in the first hour, and then the rest of the meeting is senators bloviating about one political point or another and asking him questions that are leading and kind of pointless, really. We do get the JOLTS jobs opening at the same time. And that obviously has major implications on inflation in the United States. After all, if everybody has a job and they can't fill all of the jobs, then that means wages increase, and that has a detrimental effect on inflationary pressures. And as I mentioned, it is a 2-day thing. So on Thursday, we have Powell speaking as well. Although, again, by then, it's just political hackery. So I wouldn't worry too much about it. Thursday, pretty quiet in the beginning. And then we get the ECB main refinancing rate and statement. This is going to be interesting, not necessarily because of what they do, but they've got a problem. Germany has had some major economic headwinds and downturn, and sooner or later they're going to have to come to terms with that, even though there is inflation in the EU. After all, Germany is like 85% of the entire GDP of the EU, so it's not like they can ignore it. It wouldn't be something like, you know, like a Slovakia or even a Finland struggling. This is the main engine of Europe. Shortly thereafter, we get unemployment claims in the United States. That can be a stock market mover. And then we get the ECB press conference. That's where the rubber meets the road. I think a lot of people are going to be paying close attention to what Lagarde has to say, looking for hints of when they may start easing. After that, we have Friday, and Friday is going to be the big one because, again, it's going to focus on North America, but this is one of those months where both the Canadians and the Americans release their employment figures at the same time. Now, if you're following the Canadian numbers, you can take both of those numbers and extrapolate that out to the US dollar Canadian dollar pair. For the rest of the world, they'll be paying attention to the United States. Honestly, the best thing that can happen for the stock markets and assets in general would be that it misses and it comes in really weak. If it comes in strong again, you might see a big sell-off initially. So expect a lot of liquidity games being played and a lot of nonsensical behavior. It's also a Friday, so that causes its own issues, but it's also worth pointing out, as I record this on Friday, March 1st, there was no jobs number released because they never released the employment figures on the first day of the month. So that's why it's actually the 8th coming out. But that being said, right now the markets are looking for, they want to see the economy cooling off because that gives them the cover of the Federal Reserve cutting rates. Now, generally what happens in a late stage cycle like we're in, they look for that. They eventually get it. And then the Fed has to play catch up and start cutting aggressively. And that means recession. And that recession typically has a negative effect on the markets. Not initially. Initially, everybody gets excited for that cheap money, but eventually it dumps. So every time we get one of these types of announcements, and especially the employment, you start to wonder, how close are we to that inflection point? I don't know that we are now. But remember, bad news, good for stock market. Good news, bad for stock market. That's just kind of the correlation we're in now. All right, so let's go ahead and take a look at the charts. Okay, so the first chart I'm looking at is the US dollar Japanese yen. It continued to go sideways during the course of the week, but at this point in time, it is a market that has gotten a bit, frothy previously, so the fact that we're grinding away makes a lot of sense. Ultimately, the 50-day EMA below, I think, offers plenty of support. The 150 yen level above, though, if we can take that out, we can really start to move to the upside. The S&P 500, you can see, has just shot straight up in the air on Friday, and it looks like gravity is just a thing of the past. We'll have to wait and see how this plays out, but right now, clearly, it's on fire, and I think that will continue to be the case. Looking at the Nasdaq 100, of course, we've seen a huge move again this past week. It looks like Friday continues a bit of the melt up as we just don't, there's nothing to slow this down at this point. Doesn't mean it's healthy, and it doesn't mean that you shouldn't be somewhat concerned, but ultimately, there's just no way to fight this trend. It is going to continue to be a chase the trade type of situation. This melt up behavior can be very dangerous, but you only have one choice. You're either long or you're on the sidelines, and there's no in between. I just don't know how you can fight it at this point. Underneath, I think that the 20-day EMA continues to be important, right along with the 50-day EMA, and then eventually 16,950. Not that I think we're going to be anywhere near that anytime soon. The Australian dollar on Friday recovered quite nicely. We continue to just kind of hang around in this area, though. I think this coming week is going to be more of the same for the Aussie. We may see some movement in the US dollar late in the week due to those jobs figures and Powell speaking, things like that. But the range between 0.6450 and 0.66, I think, continues to hold. So if you're a short-term trader, it might be something worth messing about with. But if you're a longer-term trader, you're not going to be very happy with this pair right now. The euro continues to bounce around in somewhat sideways trading as we just don't have anywhere to be. I think that might continue to be part of the problem here. With the euro, a lot of this will come down to that ECB statement, decision, etc., that comes into the picture in the middle of the week. So do pay attention to that. Between now and then, I wouldn't expect much. Crude oil tried to break out on Friday. We didn't quite do it. We pierced that top. Generally speaking, and you can't always count on this, but generally speaking, what happens is something like this bursts the bubble, you kind of come back a little bit, and then people chase it again. I do expect that oil will probably take off pretty soon. And I do think that oil might end up being one of the better trades this year. So I look to buy dips. I don't necessarily want to chase it. And I don't think you will have to. You can go down to like the hourly chart. You can see that they're already trying to lift it a little bit. Somewhere in that area. Don't get over levered. Recognize that you could see a nice $5 to $10 move. Same thing over here in Brent. Looks very similar as you would expect, or UK oil if you prefer. So gold has broken out to the upside, and gold suddenly looks like it's about to just rip. And if that's going to be the case, you can probably count on the US dollar taking it on the chin. And clearly, as I record this, it's just the Americans on board, and that's not a huge surprise that they're selling the US dollar. That's what they do. Over here in silver, same thing. Silver is just ripping to the upside, so we'll have to wait and see how it plays out. $23.50, I do think, is a major resistance level. If we can break that, then we can go another dollar. In the short term, though, it looks like we're going to continue to see at least this range be adhered to. It'll be interesting to see if we can take that out. Next week could be the week, though, due to the fact that we have the jobs number. Big move on Friday, though. Follow through probably going to be a little bit difficult initially. Obviously, Bitcoin has been a major story for most people. I don't think that changes anytime soon. And with that being the case, we're watching. As I go to the weekly chart, you can see where we're at. I think you need to see it pull back. I don't know that you will. I would love to buy it at 52,000, but this is one of those markets that once FOMO takes hold of it, it just takes off, and it looks like that's more of the same here. US dollar, Canadian dollar. This is one that I think it's going to be all about Friday. We'll see how it behaves then, with the US and Canada both releasing employment figures. That being said, there is a crossover here between the 50 and 200 days, so I like the idea of buying dips as things stand right now. If we can take out 136 to the upside, then I think we go much higher, and it could be a nice trade. Dollar Swiss really looked like it was going to break out during the Friday session, but has done a complete 180 to show extreme signs of weakness. With that being said, the 200-day EMA looks like it's going to hold, at least as things stand right now. The 0.89 level is going to be crucial. If we can get through there, we can go much higher. Same thing over here in the British pound Swiss franc, although we did pierce the 112 level, and it looks a little healthier than, say, the dollar against the franc. Not a huge surprise because we are seeing a lot of dollar weakness on Friday. I still prefer this. just because of a momentum thing. The DAX has shot straight up in the air for the week, but the Friday session does suggest that maybe we are going to see a pullback sooner rather than later. So it is possible that we get that pullback and a better entry opportunity going forward. I would love to see it drop to 17,000, but that's probably not happening. FTSE 100 has been negative for most of the week. We did turn around. It's going to be noise again this week. The Dow Jones 30, the Wall Street 30, if you will, pulled back a little bit during the trading session on Friday, but now looks really good. Looks like it's ready to continue going higher. And the way that some of the other indices are behaving in America right now, I think it'll just get dragged right along. We have the British pound. Looks like it's going to head towards 1.2750. I don't know that it breaks out, though. I think this is still a market that has some work to do. Nikkei 225 in Japan, just off the rails. Look at this. Buying the dips. It is not a market that you want to be short of right now. I don't know that you want to chase it, but you don't want to be short of it. Dollar MEX continues to go nowhere. The peso just kind of going sideways. Euro Swiss. Now, this is going to be one that I'm going to be very interested in, and I have featured in some of the daily work lately. We're above the 200-day EMA, so technically we are breaking out. I don't think it's going to be the easiest move, but I do believe that eventually we get to the 0.97 level. That'll be especially true if we do see some type of euro strength. Ethereum continues to trade lockstep with Bitcoin. It's just pressuring this major area at 3,500. We'll see if we get a pullback. I would love to see 1 to 3,000, but don't hold your breath. The CAC 40 in Paris pulled back to the 7,900 level on Friday to test it yet again, only to turn around and show signs of sideways action. And finally, over here in Litecoin, we're at 84. It looks like Litecoin is trying to join the party. We'll see if it actually gets to. But at this point in time, certainly looks like it is bullish as well. And like other things in the crypto world, it is a buy on the dip type of market. So that is this coming week. And most of the news and the charts in focus. You can always check our YouTube channel for daily analysis. And of course, every week we give an outlook for the upcoming week. Thank you. Give a thumbs up and make sure to subscribe.
AAAFx